Stavros Tousios for M4Markets. Today we're gonna return to euro dollar and also gold. There are some similarities in the price action, but the RSI shows us something different in both cases. So let's see what is the expectation for euro dollar first. If we use the Fibonacci retracement here from the bottom all the way up, you know that we missed the 38%. Now, typically, when we have continuations and after 5 waves up, which we have actually seen so far, what happens is that markets correct anywhere between 38 and 62%. And in this particular case, because we are looking at a potential reversal, most likely also a deeper correction down to around the 62. So maybe this medium-term leg to the downside, I would say, since the high was in February, maybe it's not finished yet, okay? But maybe we have also finished and this is going to start a new move to the upside, okay? Now, I said that markets move in fives, right? You remember that, and I keep saying that. And what we currently also see is that the low is over here. So this could be the first move to the upside, and maybe we are going to continue like this. Now, personally, I do see this as a more clear, directionally speaking, downside leg, rather than this one to be an upside leg, which means that I suspect that another leg to the downside might be seen before we continue up. However, and since the RSI is not offering any signals, we actually see symmetry between prices and the RSI. And when that happens, especially when we are narrowing down, that symmetry typically suggests that we are probably going to get a triangle. So if we were to get a triangle, that would mean that all of this structure could be a triangle. Maybe this would be the first, the second, then we'll get the third, the fourth and the fifth wave, and then continue higher. So maybe we're going to stay in this territory for a while, guys. And as long as we see the RSI momentum actually being in symmetry, in sync with prices, then we are likely to consolidate until we see that breakout. So for now, and because this looks like more of an impulse to the downside rather than anything else, the assumption is that we could go lower to 106.53 perhaps, okay, or at least to the bottom of this base channel. That of course assumes, because we have crossed, right, and we are above the 50, assumes that we not only stay below 61.8 but we lose 50 as well. Now when we come on the other side here and we are looking for we look for gold, look at the difference. We are seeing similar price action, right? And it could be something like a triangle forming over here. But the problem is that the RSI has done a new low, okay? And this is a little bit more bearish for gold. Although at the same time, this can also be an actual hidden bullish divergence, right? Which means that in case we manage to stay above the 1943 high, we could see another leg up. This leg to the upside, okay, might take the previous high. And while it does that, it will very likely give us a bearish hidden divergence. And from there, it would make a much better case for a potential decline. Okay, now of course this is all based on this assumption. Now if we do lose the 1932 or so, or the 1945 as well, then the next level down would be around the 1900, and that would imply that instead of a hidden divergence bullish, we are actually seeing the convergence of the RSI and the prices kinda transpiring into the markets instead. The bullish hidden divergence might indeed play out as long as we manage to capture or recapture the 1975, let's say, and move beyond.